A world powered by the blockchain is being formed right in front of our eyes. Experts are calling it the Internet 3.0, the next digital revolution. It's leaving many investors and even institutions looking for a path to take an early position in this massive opportunity. Bitcoin, Ethereum, Ripple, Dash, it's all speculation at this point. But what is certain is that the most profitable businesses for cryptocurrency and the blockchain is in the actual creation of these coins. This is why some of the top early adopters of Bitcoin, blockchain miners, fund managers, and even billionaires have come together to create a new vehicle to invest in the blockchain core itself. Get immediate access to this new company by going to crushthestreet.com/Bitcoin. Hello everyone, and welcome into crushthestreet.com. Thanks for joining us today. We're joined today with Peter Vessenes. I'm very honored to speak with him today. He is a Bitcoin pioneer, has deep roots in Bitcoin tokenization and blockchain technology. He founded the first venture-backed Bitcoin company, the International Bitcoin Foundation, and he's also proposed the pooled Bitcoin mining. He's been featured in the Bitcoin Phenomenon documentary. You might have seen that. He's with newalchemy.io. Peter Vessenes, thanks for joining me today.
I'm glad to be here. Thanks for having me.
Well, we talk a lot about the future of blockchain technology, specifically Bitcoin here at Crush the Street. And today, I guess I want to take a step back and go down memory lane a little bit. Most of us were not around back in the very early days, 2010, 2011 of Bitcoin. And I'd love for you to just give us an idea, just your general thoughts on what things were like back then, who was involved with Bitcoin, and what was the general idea, the thought behind what was going on in this sector?
Yeah, it's fun to think back. I have been reminiscing about it a little bit for reasons I'll tell you in a second. You know, the early days of Bitcoin, I mean, if my history and interest in digital currencies goes back to the late 90s. I studied theoretical math at Brown, and I had kind of an emphasis in number theory and cryptography when I was there. And the late 90s were a time when people were like super sure that micropayments for the internet were coming. That's what they called it back then. The micropayments theory was, I think, a good theory, which is just that there's lots of stuff you're clearly going to want to do on the internet and pay for in small amounts. And there just weren't good proposals. So early days of Bitcoin were, this kind of sort of cypherpunk types who had an inkling that maybe they'd figured this out. And there's a lot of intellectual energy, a lot of emotional energy around just that for the technology. There's also, from the early days, there were I think it was like Russians and Italians early days on the forums, and people who, are more sort of interested in private money or have a kind of more flexible sense of what you owe the government with your money than maybe Americans do. And then you also have this libertarian perspective, kind of crypto-anarchist / libertarian. And all of those kind of, were this incredibly fertile melting pot for ideas and culture creation and so on. And all of it, I think almost all of it, I think we could say safely happened on the Bitcoin Talk forums in those days. So that was really the place to be.
Okay, so what was mining like? Now this is a big deal. Mining is that's how the Bitcoins have come online, and it's a big deal because the price has gone up so much. I think last I checked, we're just under 4,000 for Bitcoin, and in those days, just give us an idea of what kind of profits were miners making, or was there any, or was it just a simple function of the ones who mined and didn't sell were obviously paid out real big as the Bitcoin price continued to rise? So yeah, just thoughts on what that was like.
Yeah, mining, and I have a few bullet points about mining that I tell most people who ask. So if we cast our mind way back, though, the first version of the Bitcoin client I downloaded was in the FAQ was, how do you get Bitcoins? And the answer was just leave the client running on your laptop for a few hours and you'll have 50 Bitcoins. So the network was so small that, even on a laptop, by default, the client mined. Like the original idea was everybody's going to want to mine. And it's all part of securing the network. Like, so in Satoshi's mind, the securing the network and the utilization of the network were much more linked than they are now in people's minds. And there wasn't really, this was before there was a ready market for the coin. So what your 50 Bitcoins might be worth today or in the future is really sort of a matter of like speculation over beers or something. Instead, they're just more used as like tokens to prove participation in that era. And one thing I think is really interesting when you talk about mining, you're like, how much are miners making? Is like the very first question that that you bring up. And over the years, that the kind of very hard economics of mining have ended up creating both a mindset and a certain set of behaviors, which I think is really interesting. To skip way ahead, like if we think about the last couple of years of mining, we've got large-scale Chinese miners. We've got really essentially now one, but maybe generously two chip companies engaged in the Bitcoin mining space. And then you have like lengthy sort of religious wars over, protocol changes. And one thing that I've always found is funny is that, it seemed almost self-evident in 2010 that if there were a company like Coinbase, they would mine a lot so that they could have influence over the network, whether or not they made money at it, because the network influence was like the thing that miners got. And so I think it's just, I'm not going to say it's a detour, all this kind of who's made money mining as a question. I think the economics have there's a lot of theory right now that says, the particular Bitcoin mining economics, have led to too much centralization, and, people like Greg Meredith at Archain and others trying to like rework how mining could work and get it more decentralized. But early days, mining was like a way to get coins. It was also a way to, you're part of making it happen. Both of those were together.
Sure. I've heard that the people, the companies that are largely controlling the chips and the miners right now, especially, really the chips, are essentially centralizing Bitcoin. And you kind of brought that up to a small degree right here. Would you care to elaborate a little bit more on that and what's going on behind the scenes?
I mean, to talk about centralization and decentralization, I think, you need to first understand if you're having a religious conversation or if you're having kind of like a game theory conversation, or if you're having some other thing, some maybe economic conversation. So I'm not religious about decentralization. I think often it's that. Often the you sink to the sort of like lowest common denominator in your decentralization group, and as we've seen at times, that can be very, very low, right? So that said, if we move the conversation away from religion to like, things like people worrying that they'll get cease and desist letters about publishing their digital money just because banks don't want digital money not issued by them. If you sort of like hypothesize that's a future to worry about when you're constructing your blockchain, then obviously decentralization has just this really helpful component, which is you can say, look, like, think about 100,000 people mining on their laptops, which is not at all what happens right now. But if you imagine that world, it's pretty hard to imagine somebody stopping that world at the same time. And I think that, those kinds of considerations are what are in people's minds when they talk about mining centralization and decentralization. Bitcoin mining is pretty flexible, actually, which is to say, if a nation state came in and wiped out all the current mining chips, seized them, whatever, we're down, like however many peta hashes, or I don't know, are we at exahashes yet? I don't track this stuff very carefully in Bitcoin anymore, but if 99% of them went away, then even if there were no protocol changes or hard forks, within a month or two, miners would be back mining just at a different scale, and you know, maybe GPUs would come back or other things. So the protocol's fairly flexible to large reductions in hashing power, and so I think, you know, I think we end up coming more to the questions of, you know, is it good for a single chip company or a single systems maker maybe to have so much influence over the supply for the miners?
So Peter, you know, you were obviously involved with Bitcoin pooled mining. I'm curious, and I'm trying to wrap my mind around this. When you have a mining pool, is that one vote when it comes to Bitcoin, or is everyone that's in that pool still have a vote? And I guess as we continue to grow it and more miners come online and it becomes harder and harder to be profitable, it keeps going towards these large mining pools. And I'm just wondering about the dynamic of the pull when it comes to these mining pools.
So yeah, the reason you'd get involved in a pool, well, cast your mind back. You know, it's 100 people with their laptops mining. Fine. So, you know, there's 7,200 coins a day. So you're getting on average 72 coins a day if everybody's laptop's about the same speed, and that's fine. Now, if you jump ahead to 10,000 people on their laptops, the way the mining algorithm works, you're going to divide everything I just said by 100. So now you're going to get 0.72 bitcoins a day. And the simple problem with that is Bitcoin at the time only put out bitcoins in 50 Bitcoin chunks. So you're going from like about once a day you get paid to, you know, about once every 100 days you get paid. And as you're eyeballing rapid growth of the mining, you worry like you might never get paid if you're doing it on your own, just because you get a little unlucky. You don't have to get that unlucky before you don't get paid. And so the concept of a pool is just that everybody's going to throw all their computation in together, and they're going to keep track somehow of how much work everybody did. And in exchange, when they'll even out their risk, because the odds of getting lucky or unlucky on a block, you know, go down the more you have. So really pooled mining, its biggest benefit is letting miners who don't have enough computational capacity on their own to make an impact on the network to kind of get together and, you know, earn money usually. You'd asked me about voting and control over the protocol. And you know, when Bitcoin was first ingested, I think the thinking was that miners would provide the fundamental vote over how the protocol proceeded. Like if miners didn't like it, then you wouldn't have as much computation on the network. It wouldn't be as secure, and people would change to what miners like. So that was, you know, kind of like you know, a little bit of a. It didn't take the human politics factor seriously, that proposal. And I think we've seen instead that core developers or even groups, just people with cults of personality, can have a lot of influence over the protocol as well, and that, you know, that they end up negotiating with miners at some level, mining pools even. So we do see mining pools getting political these days, and you know, there are a lot of ways you could do it. I think the community could instrument whatever system they wanted. As it's happened, most voting on protocol changes happens in the part of the block that miners and therefore mining pools control, and it's pretty simple. It's like you can just signal your preference for some essentially referendum or not. You could imagine something else. I mean, you could imagine that mining pools allow fractional signaling based on what each of their constituents want or something, but nobody's kind of gone to that level of sophistication yet or seen a need for it.
So Peter, I'd like to ask you about Satoshi and, you know, his anonymous nature, whoever this person is. And, you know, again, going back in that, the history of Bitcoin, what things were like in the early days, you know, who was Satoshi Nakamoto, and is it an important factor as to why Bitcoin got to where it is today?
I mean, Satoshi I don't usually talk about Satoshi as a preface because I think people are overly interested in Satoshi. So, but your question is interesting to me. So I think the first thing I would say is, Satoshi was community leader, code publisher, haranguer of people, and kind of like keeper of the vision for some time, And if you go back to early days on Bitcoin Talk, you can see Satoshi like very vigorously engaged in debates and conversations, and even then, the community, open source communities are often focused around a cult of personality. So you have like Guido van Rossum, who's the benevolent dictator for life of Python, right? Sort of a tongue-in-cheek thing. You've got Larry Wall for Perl, Linus Torvalds for Linux. So this is a thing that nerds do online, that they sort of like emotionally attach to some guru. And Satoshi definitely leveraged that sort of like emotional kind of engagement early days. One that comes to mind is Satoshi's early days, like laid down this idea that there should only be one client, and because like it was still evolving and he didn't want a forked client. And so, Bitcoin Java, Bitcoin J coming out, which Mike Hearn led that project, I think in those days, was a big deal. So he kind of like leveraged his status to ask for things from the community. So it's like, it gets like extra sort of like religious overtones when Satoshi then disappears, right? And to this day, you have sort of what I think of as fundamentalists who think that saying like, what would Satoshi do in a conversation is like a way to win an argument, And I think that's very interesting. I mean, I think at New Alchemy, we help people with their tokenization. Sometimes they're launching whole blockchains, sometimes they're launching smaller projects. And it is advice I give every client launching a blockchain, is that people want to attach to a leader in these blockchain spaces. And it's just part of the community. It's just like part of how these communities have developed. And whether that's good or bad, we could talk at length about that.
Well, going back to the early days of Bitcoin, did you ever believe, you mentioned sitting around talking it over beers with your friends, did you ever think that it could get this big back in the early days before you really started to see it, I guess, catch on?
I must not have. I mean, I was at PorcFest 2012, because PorcFest is like this libertarian utopian meetup in northern New Hampshire that happens every year. Mm-hmm. And I was like, I gotta I'm by no means a libertarian, so I was like, I gotta go see. This is like the earliest in-person Bitcoin economies. They're like, yeah, you can buy anything, almost anything at PorcFest. You can pay silver, you can pay gold, or you can pay with Bitcoin. Like, I gotta go check this out. And I often think I must not really have believed, because I clearly remember spending like 6 Bitcoins on a hamburger at PorcFest. And if you're, like, it's one thing to like just talk shit about, oh, these will be so valuable someday. And then clearly, I clearly did not act as if I knew that was coming. I would have purchased many more Bitcoins if I'd really believed. So, I think we have to kind of look back at our actions and see, based on them, what we were thinking,
Sure. Well, that's really interesting, man. Well, you're a pioneer in the sector. You've been doing this for many years, and you've definitely been able to position yourself into things that are very interesting. I know it's been said that we have the Sir Isaac Newtons and the Nicholas Copernicus is, working in the crypto space because the money is there. It's very exciting. And, honestly, the Jetsons couldn't have even anticipated what we are seeing now with blockchain. It's just that revolutionary and that foreign, really, when it comes to things that we've had not that many years ago. So if you would, please let people know what you guys are doing, where people can learn more about you. And again, thanks for coming on Crush the Street.
Thanks for having me. It's just super great to reminisce a little bit, and I appreciate that chance to do it with you. New Alchemy is focused solely on tokenization. So as far as I know, we're the only complete full service tokenization company, which, can take a business or a startup and get them marketed, branded, token economics designed, introduced to the right players in the blockchain space, and then launched. So that's what New Alchemy is doing. Our clients have tokenized something like, I think at a peak, over $2 billion of tokens were traded, that we've touched or advised in some way, and just in the last year, which is pretty cool. And to me, the token economy is just super fascinating. Like, I think it's at least as interesting as Bitcoin was to me in the early days. So I predict you'll be talking about tokens for many years with people, and I hope that I hope you enjoy talking about that stuff, because it's coming.
It is coming. Things are changing fast, and we're preparing people for them here at Crush the Street. Peter, thanks for coming on Crush the Street today. Really appreciate your time.
Thank you so much. I'm glad to be talking to you.